Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. We actually had a really cool Thursdays is the baby powder report, and it looks like YouTube's kicking in here. Let's just make sure it's working. It's Daily Brief Recap. Yeah, it is awesome. So Thursdays we have the baby powder report, which we affectionately call our report from. One of the TRI principals, Julian, he lives out of Thailand. You can always come on the site and ask him why we call it the baby powder report. But nonetheless, excellent summary. And Julian really likes to use the RSI study and Keltner channels and Tom DeMark indicator. So I really like it as a very unique, very fresh, very different view of the markets. And actually, it was interesting. We did. Maybe you can Google it. I might even put the link in the video here today for you. But I did a really cool interview with the people from Bravado Trading yesterday, and even in that interview, I talked to Colin about how, I don't really care what setup you use. In fact, setups themselves are extremely personal. It's a very important part of every trader. Must go through the exploration process of what actually works for you. And you can't just buy some newsletter and just take somebody else's signals. Because quite often what ends up happening when you do that is maybe the market state changes and the setup stops working. And you just get really frustrated because you're using somebody else's model. So where am I going with all this? It's just really refreshing that it's validation of what I've been sort of trying to convey to the community, that we need to be working with trading plans. We need to be trading setups. What I like to do at TRI is just simply set the table and give you, and we have like 36 different modules in our education program, just give you a world of different tools that you can use to go and build those setups. But the ultimate reason why you're taking a trade should be along the lines of 3 unrelated reasons to justify your actions, and then you just keep doing the same thing over and over and over again. Okay, enough of that sort of rhetoric. Let's get on to looking at the market. As I like to do, I put together a little chart deck for you guys here. So I think I had sort of warned in recent broadcasts that we have ECB was today, and that's the European Central Bank, and we have the FOMC and the Fed coming out next week. Lots of monkey business going on in currency land this morning, and I do remember just telling the public, but of course on the site I was screaming this, let's maybe just leave these currencies alone as we go through these really big sort of fundamental driver events. And you can see on the euro, if I change this to even like an hourly chart, I mean, this is just absolute chaos in euro trading land this morning. And what I really think happened here, which is kind of tragic, but it's so typical, is it looks to me like this was just nothing more than a bunch of lucky people got in off the bottoms here maybe last week, and we're like, okay, we're in the euro long, let's just keep kicking butt. And then I think probably also on the other side, on these rallies, people got short, and okay, we're going to grind this thing down. And you can see how just on the event they went out and just washed the top, stop. All these people all got flushed out. These people probably went, oh, phew, wow, we're fine, okay. Then the market goes screaming down, stops all these people out, and then comes screaming back up and stops these people out up here. My hunch is they're probably going to have to go after these highs and stop them out. But this is such a classic anecdote of what happens in the market around big fundamental driver events, and why, as quote-unquote traders, we're really best when we come into these really big events to maybe just leave these kind of markets alone, let them settle down, let them put in new setups after the fundamental event. Also, too, interesting commentary on, we have one setup on the site when I was a prop firm. They used to always trade basically buying against lows, selling against highs. So the day traders trading, we have one set up on the site we affectionately call the SFU set up specifically for day trading futures. And this is exactly that commentary. So, take it for whatever it's worth. My general feeling is we just got to let the dust settle here before we make any grand decisions about things like euro currencies. On the flip side, through these crazy fundamental central banker events, you can see the U.S. dollar is also going all over the map here, and we kind of talked about that yesterday where, get ready for some pretty crazy action here out of currency land. What's really funny about this, and I actually we'll leave the currency conversation at that for today because I just don't think there is a trade there, and I think everybody should have gotten a really good lesson about what it looks like to get the hell out of markets as they come into these nutso insano face rip events. Moving on. Today I wanted to, yesterday and the day before I talked to you about how I'm sort of slowly building up a put position. So I'm not going to really talk too much about that. But what I wanted to convey to you guys, and you can see stocks are pressing higher, sort of that risk on event. I just wonder whether maybe there's some monkey business going on with the options. Julian did a good report today on options expiry. And it just feels, first and foremost, we talked about those cycles. I'm not looking for a top in the stock market until about the 24th, 25th. So that's out here. But I wouldn't be surprised now if we get sort of, the leader of the United States right now is clamoring about wanting zero interest rates in the States. But I'm seeing inflation data coming out that's actually hotter than expectations. So I don't know how the Fed's going to be able to cut rates in the face of that. And then also, too, look at the proximity of the stock market to new highs. I don't see how the Fed can go and aggressively cut interest rates with the stock market up at or close to new highs. I do understand fully there is a lot of stuff going on in Europe, and you look at German data and et cetera, the Brexit issues. I think Europe definitely has problems, but we're not seeing the same thing in North America here. So also, too, people were squawking about things like yield curve inversion. I think you can actually see that the bond market is cleaning itself up very smartly. I've been talking at length recently about how I figured that risk off was actually looking extremely risky here, and I think that's still the case. Point here is that, interest rates going up, that'll calm those yield curve inversion people down. So ironically enough, it's actually a good thing that this is happening. But my hunch is that, maybe they take the stock market up into that FOMC event, but then the FOMC comes out and says, we can't, look at the inflation data. And I, even tweeted it out this morning, so check that out. But we can't lower interest rates if inflation's running hotter than expectations. And, stock market's basically at new highs. How on earth can we lower interest rates in the face of that? So we'll see what happens, but really interesting anecdote. Stock market's relatively strong in the States, and I think this is going to continue for the next week or so. Talking about risk on, risk off, and looking at the metals. It was interesting through that ECB event here this morning and that insane volatility on the euro here today to actually see that gold tried to rally. And we've been talking a little bit about this recently. I kind of wanted to see a bit more rally here, though. I'm a little disappointed that we've crapped out here. I really wanted to see a rally back up into reload zones, then pay a nice M, and then I might actually think about shorting. But we just got a wicked wick here painted today. And keep in mind, we've got FOMC coming up next week, so I don't think this is done per se. But we might find that this actually turns into some sort of like head and shoulders event here. That definitely could definitely be playing out there on the gold market. So just be cognizant of that. I actually, like I said, I would actually like to see a little bit more rally here, please, out of gold. I don't want it to crap out right here. And then, if we look at things like silver, and unfortunately the silver boys, they are notorious for messing around with price. Doesn't surprise me at all to see straight up, straight down, typical silver jerks. We do have a fractal there. I did hear some people saying, like long term, things are looking really bullish for the silver market. And that's fine. I don't really have a problem with that. I'd actually like to see this high taken out for us to really believe that longer term trend has actually kicked in. And, do yourself a favor and go back and look at silver chart from like the 1980s. All right. Silver loves to just sort of create these ranges and then just park themselves in these ranges forever. I do absolutely love this trade. And, we did have some TRI alumni who absolutely owned this long silver trade here on this rally here. I didn't participate, tisk Brian, but nonetheless, I think that was an excellent rally. But I don't know. At this point here, I would like to see some backfilling, clean this up, and maybe even come back to these kind of long-term trend lines. We could probably do one off of here. I don't know whether we have to come all the way back to the base. I do like the idea of us coming back into sort of this, $15 area, back to the original breakout. So that's what I'm going to be looking for over the months ahead. We'll see how it goes. Only time will tell, yada, yada, yada. The market that I'm actually most interested in, if you are a metals bug, is our buddy Palladium. And I think I talked to you guys about this a week or two ago. This market, I think, is looking really uppy. And sure enough, boom, show me new high and I'll show you something. So you can see AB equals CDs. We're probably painting much higher here. And keep in mind, Russia basically controls the supply, like 80-90% of the world's supply of palladium. So if you're going to try and play palladium, my advice is, and this is not financial advice, it's just my opinion, but I do like the idea. North American palladium is one of the only proxies in North America for palladium. And you can see that good old North American palladium had a high there, 1697, and we traded to a new high here, 1711 this morning. So she's still pointing up, and I don't see any reason to touch this right now. Just, show me a new high, and I'll show you something. Metals, that's sort of my thinking in that space right now. Moving on. I don't know whether I talked to you guys in the public about this, but going through all the commodity rags, actually one market that I'm very interested in is lumber. I want to try and get long lumber here. Looking at the weekly chart, you can see trendline breakout, show me a W. Come on, give me a W somewhere. Oh, geez, we're making new lows. Okay, come on, give me an... Okay, we're starting to finally see some signs. If this thing takes off through, and that high there's 413.60, then I think this guy's actually in a new bull uptrend. But, only time will tell. For those people that are in Canada, and I think this actually does have a U.S. proxy, but I used to, when I was a financial advisor and stuff, retirement planning, all that kind of conversation, I used to follow the Canadian lumber stocks really closely. One company that I like as sort of a proxy in this space is this Norbord, really boring. Not really sexy investing, but hopefully everybody sees those trend line breaks. 1, 2, 3. Show me a W and I'll show you a buy signal. And Norbord here, and they always say stocks lead the commodity. You can see if we just do a horizontal line off of this level right here, gee whiz, Norbord's going and breaking out. In fact, actually it broke out 2 weeks ago. Didn't close above here, but you can see we're pressing higher again here. So, Brian and his weekly W's, I went and picked up a little bit of this for my RSP. And just FYI, these guys are paying like a 5.5% dividend, which is fantastic numbers. And if lumber actually does get going here in earnest, then I could very easily see this stock jump up quite a bit here, and that would bring that dividend back in line with sort of the street. So, if you're interested, if you're in Canada, take a boo at the lumber names. I think we're kind of going way over time here, aren't I, Kevin? We're at 14 minutes now, so I'll just quickly brush through this. We've talked recently about the pot stocks and a catalyst for upcoming fundamental drivers. Canadian, legally, they're supposed to be passing edibles legislation with regard to pot, and of course David's tea. That's going to be all around that edibles kind of conversation. I think I told you guys recently about this bot setup that's set up off of 149. What was really interesting about this trade is you can see the stock actually broke out a couple days ago. And then Aurora Cannabis came out with their earnings, and they were really bad. And this stock actually dipped right back down to the original double bottom level, the bot entry level. It gave you the opportunity. You see the low is 149. That is the bot level, and then just took off like a rocket. So it's really cool to see. And of course, everybody at TRI is like, woot, woot, right on, woo, way to go. We have had moves stop to trailing levels here hit now. So on any kind of market structure, if you had taken this bot, you can start, trailing your stops higher and locking in profits. Absolute worst case, at this point now that this level's been hit and the move stop to scratch, if we lose this 149 level, then I think you just got to walk away. Full disclosure, I'm long off this double bottom down here, so I am no hurry whatsoever to touch this. I'll probably be looking to sell half on a double, which interestingly enough is going to be up in that sort of $2 area, which just so happens to be the bot target as well. Finally, the corn. Actually, I had a really cool report from Julian on RSI, looking at the corn. From an RSI perspective, this is looking really interesting. We're coming into a very powerful wedge here. Don't have time on this free video to go through all that. Maybe consider joining the site and getting Julian's take on the RSI model right now and what it's telling him. But what I will say is we've had 1, 2, 3, 4 tests of this trend line now. I could also make the argument too that this price action here, boom, 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 is creating a potential fractal. So, I often talk about how we want to see structure on the other side of the trend line. So, interestingly enough, I think I could actually get a buy signal on the corn if we can actually fractal out here. And Kevin was saying this earlier because I've loaded up Kraken because he's really interested in Kraken. He's the Duke of Albuquerque, so he's not allowed to play on sites like Binance and stuff anymore. Although I think they are creating a U.S. acceptable form of Binance. But anyway, the point that I just make is a lot of our U.S. customers trade off of Kraken, so I thought we'd just take a look at that today. And if we drill down to a lower time frame, I thought this was really interesting. Kevin mentioned this, that we've got 1 kilo, 2 kilos, 3 kilos. I'm starting to get the feeling we might have actually a situation where you know where the bot entry level is, right? We said the bot entry level is 10,297. Let's call it 10,300. And this might actually be a situation where you might even be able to front run the bot. And you can always work orders on pullbacks, but there's a double bottom working there. I've been tracking this double bottom on the site just to see how it plays out. That is that double bottom sort of candle body level there. And it's interesting to see how 2-to-1 takes us back up to this uptrend line. And good old mountain man level, we talk about wicks and tails need to be eaten. So there's a big old wick. You can see how this wick was just eaten. Notice too, there's a funny little hole in the profile up here, right around mountain man level. So I actually don't mind the idea of people hunting longs here. I don't think it's a terrible idea. And if you want to go just nice and conservative and slowly, I don't mind the idea of people hunting this cute little fractal here. As you can see from the bot levels, and this is just going to be nothing more than an AB equals CD, that could take us back up into these old highs. And of course that makes sense, right? Pros are going to be shorting against highs, buying against lows. What I'm worried about here, and I'll just sort of finish this off for today, what I'm worried about here is maybe we get a big pop into that backed event, and then we have to roll over and come down the other side. So, if you are trading Bitcoins, I think there could be a potential long setup here. It hasn't really developed off the higher time frames too much, but I can definitely see it off the lower time frames. And actually, I was really pleased to see that Kevin, as we were getting this going, he even saw those double bottoms and triple bottoms coming in off the lower time frames. So there you go. You never know what's going to happen in the market. Never a dull moment. You want to try and sneak in off of, lower time frame W's. Maybe sell 3/4 of the position at bought levels. Move your stop to scratch on the remaining. And if all hell breaks loose and this thing goes moons, then you've still got a whack of this trade on from what I would consider a pretty good level. All right, why don't we leave it at that for today? All the best, and bye for now.